And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story, real talk about money, markets, life. Now, it's The Real Investment Show, presented by RIA Advisors.
Hey, we're here live. Welcome to The Real Investment Show. I'm Rich Rosso, CFP, here at Certified Financial Planner, here with Mr. Danny Ratliff, Certified Financial Planner. And Brent earning his paycheck by moving dials and buttons that are probably not connected to anything.
No, I'm just over here playing.
Danny bought me a gift.
Really?
Yeah, it's
what
a
was
t-shirt
the
that
occasion?
says, "How dare you?" I'm going to be wearing that a lot.
I like that. I think it came straight from the Chaz Zone. It took about 4 weeks to get here.
The Chaz Zone is up and running again after they moved the bulldozers through to get up all the garbage.
So are things ordered from the Chaz Zone considered imports now? Oh, I don't know.
I think there's a new Chaz Zone somewhere in Oregon.
Really?
Now in Portland's creating a Chaz. Chaz 2. Chaz 2. Listen, when I was a kid, I used to do the same thing. We used to string together refrigerator boxes and create our own little town. We didn't call it Chaz. We called it Fridge. So we used to hide in those.
My first radio station was an appliance box.
And that's where radio is going, back into the appliance
into the box.
Yeah. So, again, it's been a relatively quiet week. We're sort of starting to see whether or not we can make new highs in the S&P 500. How dare you? I don't know how that happens with the economic data we have right now. So I think the market's in. Let's wait and see what the heck happens here before we move forward. And actually, a consolidation where markets move sideways for a bit would be a healthy thing. It would work off some of the overbought condition that we're facing currently. So BlackRock comes out, EPS beats. We've had some good earnings from financial companies, which is funny, because all the earnings growth is coming from trading. A lot of these companies will tell you, do not sell, do not do anything, do not move, do not.
That's the only way they're making money.
Yes, but they're making money by trading. That's where it's coming from. And again, we are coming to the end of the additional unemployment benefits. It's going to be interesting to see whether or not we get fiscal stimulus, because even though retail sales, I think we're up close to 7%, 6%, 7%, can't remember. But we had a boost in retail sales. But keep in mind, the stimulus has waned. Unemployment, additional benefits are waning. Many states are going back into closed down mode. And frankly, even if they're not, people are closing down on their own. People are not getting out there and spending money. Frankly, it's one, because they just don't have it. Also, it's because, again, we have this mental memory, right, Danny, where we're hoarding toilet paper again, and we're doing all these strange things. But even if you go to a restaurant today that has 50% capacity, they're not even anywhere near that. So there's going to have to be discussion about, one, some form of additional fiscal stimulus that both parties are going to need to agree upon, and two, Danny and I talk about this all the time, some form of the CARES Act, some form of these safety nets, whether it's boosting unemployment for those who are chronically employed, working gig jobs. This is not going away. These programs might be extended month to month to month to month because it doesn't look good to go any further than that. But I think they're here to stay.
Yeah, I don't see how they can take these things away. So
what if you tell us to close down and not do anything? I mean,
yeah,
what are you going to do?
Well, you're going to have to get money from somewhere. And unfortunately, that's probably going to be with stimulus packages. And so right now they're talking about, it's interesting, day by day or week by week, these things continue to shift as the markets change as well. And so, I think the economic backdrop will be interesting to see. We see the consumer sentiment comes out today, what that actually looks like, which may be better than what we expect because people are getting back out again. So I think that most consumers feel good. If you look at look at retail sales numbers, where do you think the most people spend money? It was actually on like clothing, apparel, which was the hardest hit during the shutdown.
Masks.
Maybe that's all it.
Mask of the Month Club.
Hey, now you're onto something. There you go.
I think it's already out there.
Is it?
Yeah. It's already advertised on Facebook.
Oh, man.
You receive a new mask every month with all your favorite characters. Oh, wow. That was pretty cool. We upset the mask gods. We're sorry. We didn't mean it. So, yeah. I think you're right, Danny. I think people thought, hey, we're getting back into the groove. I need new clothes besides pajamas. We're back in pajama mode again.
Well, I keep getting, emails for dress shirts. I'm like, what in the world? I'm not ever wearing one of those again.
What the heck am I going to do with that?
Yeah. But I do think people are thinking, okay, maybe we're getting back out. We're going to start purchasing more things. We're going to get back and maybe everybody has to buy new clothes just to fit in them, right? It's either
Actually, that's a good point.
You had the COVID-19 or you have the maybe it's the opposite where you actually got back in shape.
Listen, you all speak for yourself. I'm staying trim. But yeah, there is that. Maybe I need new clothes. But you think I would just be buying new those pajama pants, the elastic seems to go. Do you see the Babylon Bee? Because they're always this Babylon Bee, if you haven't read it, is a satire site. But about Walmart made it mandatory for masks. But now they're also pants are mandatory.
Everybody's got a dress code these days.
How dare you with this dress code. But,
How dare you?
I love that. But all these, you got to keep in mind, all these numbers had to do with 1, pent-up demand, 2, we're reopening, 3, stimulus. All this is going away. So August numbers for July are going to tell us a lot about the state of the consumer. Not only that, you are going to have permanent changes in spending patterns that we need to analyze and understand. What is this post-COVID world going to look like? How do you invest in this post-COVID world? Because obviously habits have changed, trends have changed. People sometimes tell me, nah, that's not the case. I'm like, yeah, we'll see. We shall see. Again, Dow futures are up 74 points. S&P futures up 14. We're pretty flat here overall. And frankly, I think that's a good sign. When we get back, we're going to talk about a lot of stuff about, hey, working past 62, does that improve retirement? And what about a severance package? How many people are getting those, Danny? Every day we talk to someone who is receiving a package or being let go. So we want to talk about that here on The Real Investment Show on 700 KSCV, the voice of Texas.
Clear, so beat it. Just beat it. You better run, you better do what you can. Don't wanna see no brother be a macho man. You wanna be tough, better do what you can. So beat it, but you wanna be bad. Just beat it.
Real Investment Show podcasts are now available on iTunes. Listen anyplace, anytime at iTunes.com.
From the pine box to Don't Fear the Reaper. That was really good there, Mr. Clanton. This is what makes you the pro you are in the radio business.
Yeah, dumb luck.
I just tell everybody you knew it was coming.
Well, there's that.
Death and taxes, man. Can't avoid them.
How dare you?
And speaking of taxes, if you don't think they're going higher in the future, you might need to reassess yourself. Probably one of the topics we're going to be talking about on Candid Coffee. What's brewing in your finances? It's going to be a second career for Danny and I if this doesn't work out. We're going to open up a Candid Coffee or a COVID coffee chain. This is a live forum for you. This is a down-to-earth, pretty much, what do you want to talk about? Because the one thing I think everybody knows at Real Investment Advice, we don't sugarcoat anything. We don't tell you stocks are the best thing in the world since sliced bread, although you can't eat sliced bread anymore. It's not good for you. So what we want to do is make sure that you're making very solid decisions at your kitchen tables with your family, avoiding all the financial media, that's out there. July 25th, 8 to 9 a.m., Saturday morning before you get to start your day. You go to realinvestmentadvice.com, register, send us questions at Real Investment Advice. We've been getting quite a few, and this is a go-to meeting event for you. You can watch Danny eat green pancakes.
Hey, man, that's right. Got to eat my spinach.
But listen, you know what? It's a good thing for you to show these people on this go-to meeting, because eating healthy and maintaining your health, as we talk about the costs in retirement, very, very important, right? You talk about people that cannot retire. I think people who retire at 65 are young retirees. One reason they're able to do it is they have a pension. And I'm not talking about people who listen to this show, but for the most part, this is true. They have a pension as opposed to just a 401k. Yes, they're good savers. They manage debt well. They also probably have some form of bridge health insurance.
And I think that's one of the biggest keys there.
Absolutely. Because just when you think you can afford health care because of ACA, oh, you can't. So remaining in the workforce past 62 is very important. Now, I'll tell you, there are people that will work, if they can't work their regular job, they will continue to stay in the workforce. And these are non-traditional jobs. I think the economy is going to be a mosaic of non-traditional jobs as we go forward. I already started to see this. I call it the patchwork economy. Obviously, gig employment, work in Uber or second job or whatever it is, was only about 25, 28% of the overall economy. If you look at the Federal Reserve numbers, I think this number goes closer to 45% and stays there, especially among older Americans that need cash flow to come in, right? So, and that's just because they may not have a retirement plan at this non-traditional job, but they're going to be putting money away to save because they need to. So I think that's going to be, it's also a good way to retire gradually, right? Danny, you don't want to be, and this is when we're going to talk about the severance package in a little bit, but you don't want to be in the middle of this where you get let go. It's emotionally a big issue for many people.
Huge.
You know, people who actually have a financial plan, and we're seeing this right now because a lot of financial plans are coming to fruition at this point where people are going, my gosh, you know, I thought maybe I'd get a package in 2 years. How do I look? Oh, you look fine. But they've been mentally prepping for the last 2 or 3 years that they possibly could be let go with severance or not. So people are still losing their jobs here. Bankruptcies haven't really started as much as you would think. We're still really in the storm of this crisis.
Still getting the stimulus. And I think that's the biggest thing is when does that end and what does that look like as we continue to see more and more people who remain unemployed. I think the number I saw was 39.6 million or maybe 36.9, maybe transposing those numbers. But either way, it's an enormous amount of people that are out of work at the very moment. And I think this is important because this does not take into context all of the people who've been given these severance packages who can't file for unemployment yet. Yes. There's a large number of those as well. And so I think that number is much higher. I also think once you see everybody begin to get off of unemployment, that is going to be where the real kicker comes. That's when we really see how the state of the economy, it really is.
The market's not prepared for this, to your point. It's not prepared for continuing claims to be much higher. It is not prepared for a longer term, say 8 to 10% unemployment rate that you very well could face here. So working patchwork jobs, whether you're before age 62, there's a big crisis for people, say, in their 30s and the 40s and even in their 50s. I mean, I've talked to a lot of these people when I've been in L.A. There are a lot of 40-year-olds working patchwork jobs in these places and trying to make ends meet. I had one person lament to me, she's 45 years old. She goes, I don't even know where my rent's coming from. I don't even know if I have it until the middle of the month. And I'm like, my gosh, how do you live like this? This is very common. The problem is, how do you save for retirement? This retirement savings crisis is becoming much more of a point of no return. Danny, and that's very concerning. So these non-traditional jobs are not for people that, hey, you know, I got my severance. I'd like to stay busy. I sort of need the cash. It's very helpful. But there are going to be people that are working these patchwork jobs, or what I call this patchwork economy, that's going to continue to grow and have no benefits.
Well, I hope it continues to grow. You know, I'm talking to a lot of people who the anticipation was that they would go and do something. They do something they enjoy, work at Academy in the fishing department or Bass Pro Shop, something
Bass
of that
Pro
nature.
Shop's fun.
You know, those types of things. The issue that we're seeing right now is, and I don't know for those two employers particularly, but in general, it has been much more difficult for them to find that patchwork job because people aren't going out spending money in the traditional ways that they once were. So we're seeing lots of these employers cut back. So where you may have somebody who was laid off 6 months ago, a year ago, they're not finding the work that they once did, Rich. They're not able to go out. And as we're now seeing economies and states kind of go backwards towards shutting down, or, you know, even if we're not in a quote unquote stay at home order or quarantine, so to speak, like you mentioned earlier, people are already just saying, we're not going to get out like we once were. And you can see it in the restaurants. You can see it in the stores. I saw it this morning driving in. You know, this is something that we watch for frequently. But that patchwork employment is likely going to suffer for a bit longer until we get past this. And that's what the difficult aspect of where we are now is.
Listen, this is unprecedented. There's really very little historical information about, if any. We haven't had a health crisis lead to financial devastation and destruction of overall aggregate demand, and we are a consumer-driven economy. We have just destroyed the service sector of the economy, which is our lifeblood. So it's almost like, you know, you're killing yourself. And now we've got to come back from this. What does that look like? And close to 80% of the population is going to be financially damaged here for a very long period of time. That's where, whether you like it or not, these social safety nets, continuing unemployment, some form of the CARES Act, you know, being more generous as far as premature distribution penalties from retirement accounts. I think this is part of our new reality. I don't think these programs are going away. I'm not saying I agree with all these programs. What I'm saying is it's just because of the situation we're in, and it takes so long. Remember, it takes a corporation, months to recover? You know, they make them, but they come back, right? Households, they don't come back that quick. I mean, we see many households. Again, if you look at the numbers, close to 80% of households haven't recovered from the Great Recession, and then you threw this on top of it. So this is going to be another one of these. How long is it going to take for a household to recover from?
The households in the service industry just were thrown off a cliff. You get halfway back up it, and they kick you off again. Exactly,
especially like bars, right? How many people are employed at bars? You know, they might work bars at night. When I went to Nashville, I met so many people that worked multiple jobs, but the bar work was really a sort of bread and butter, at least the butter for the bread for them, for tips and so forth. You know, high-end cocktails, you know, the craft cocktails, that's all gone. So what do? So you dip into savings, you ask your parents, you borrow, you take from your retirement account, but then it goes away. And then you have to recover. And how long does that take? So you're living in a hole consistently. And again, there's so many reasons for that. What I'm saying is that if we have to understand that the overall economy, the way we measure it through spending and growth, is not going to be what the market really expects to happen. And when it sees better retail sales, I call it going from the toilet water to the toilet seat. Yes, they're improving and markets will respond. How long am I going to be sitting on the pot, Danny? That market's not going to like that, you know, very much. And that's what we need to watch here as we go forward as stimulus wanes. But if you've gotten a severance or look to get, or you're getting a package, we want to talk to you a little bit about how do you prioritize things? It's going to be an emotional thing for you too. You got to think clearly and make decisions in a short period of time. How do you do it? when we get back here on the Real Investment Show on 700 KCV, the voice of Texas.
Real Investment Show podcasts are now available on iTunes. Listen anyplace, anytime at iTunes.com.
Just funny, I was thinking about somebody from last year I talked to in the mortgage business. Been in the mortgage business for 30 years, and we have a bet that I haven't collected on yet that he's like, oh, mortgage rates are absolutely going up. I said, they'll be below 3% in the next 3 years. You owe me a steak, buddy. You owe me a steak. Before we talk about the severance, I want to help everybody understand. I know everybody's a bit perturbed about cash and coin shortage, right? We hear about that. So every year, the Fed asks a group of 3,000 people, to keep a diary of how they pay for goods and services, and the use of cash has been steadily dropping in the U.S. So it was 26% of transactions in 2018, down from 31% in 16. People, as people are hoarding toilet paper. I'm not saying using cash as toilet paper, but people are hoarding money. And most money is electronic. I rarely use cash anyway. But cash for some subsets of the economy of what we do is very important. I don't think it's this big conspiracy theory yet. Always could be. My mind could change. But the point I'm saying is that we are seeing what I see is this. It's comforting to have cash. I think people feel during a crisis, during the Depression, right? How many times do you read a story about someone who's renovating a house in the Midwest and they find all this cash behind the walls? It's just something we do. We hoard cash and we want it in hand. And I think during the pandemic, we're absolutely seeing that. But cash has been sort of waning. People don't use cash as much as they did in the past. Again, I think I've got 2 20s in my wallet. I don't think I've touched them in 6 months.
Yeah,
so
but Rich,
I'm not
I think
using it much. So.
I think this goes a lot deeper when you start talking about cash and the impact of it overall. I mean, if you think back when the initial stimulus came out in April, and I think the initial date was April 17th when people were going to receive their stimulus checks or actually be deposited directly in their account, and then we found out that the people that really needed it didn't even have a checking account, and there was no way for them to do so.
That's why you can't get rid of it.
So they had to send a check. But
Very
then think
important.
about a loved one or somebody you're trying to help, and you want to give them $20 or $40, whatever it may be. You're not going to be able to do that without somebody tracing it and tracking it at that point. And so I think that getting away from going to a cashless society will have a material impact.
Yeah, but I don't.
I hope we don't get there.
No, I agree with you. I just don't think we're going to get there.
Yeah.
I just think that it's becoming more convenient.
Oh, it is.
But I just don't think, and I think the reason why it's become a shortage is more of an emotional issue than it is some grand conspiracy to get us into a cashless society.
Well, I think it's the
But I agree with you. I wouldn't want to be in a... And Rogoff wrote a book about this and got a lot of flack for it, about going cashless. Rogoff's a big economist and so forth. I read a lot of his stuff. I haven't read that book, which I probably should do now. But I just think at this point, cash is is monitored. How much cash is requested is monitored by the Fed. But we are just using less cash. But we're holding more cash. I don't think. But we jump to the discussion of we're going to go to a cashless society. If you take the pandemic away, think about how many times you've really used cash. I mean, I put everything on my credit card so I can get points, right? And then pay it off. But cash, too, especially lower income, giving gifts is a necessity. You would destroy destroy some elements of the economy. I just think at this juncture, it's being hoarded. And that's where there's a problem when you go to a restaurant and see we're taking debit cards, we're not taking cash. And people think it's because of the pandemic, too, because money is dirty. And money, don't ever read any studies about how dirty money is.
You won't ever want to touch it again.
You won't ever touch it again. But the point, again, is I don't even know if you can... Listen, I don't know if anybody knows how you catch this thing.
Well, they're taking cash, but they're not giving change, is what's happening.
Well, no, some restaurants I've gone to now,
Yeah.
they won't even take cash.
But I think it goes
They
even
will
deeper than that,
only
Rich.
take cards.
I mean,
And they say due to the germ phobia thing.
And that may not come back. But the other aspect is think about it. If you owed somebody money, or like when our kids did our T-ball team, we're making T-shirts for everybody. Instead of cash, they said, well, just sell me your Venmo or whatever it may be. So technologies came
Well, I'm using
so far.
I use Cash App a lot. So, but there are...
Zelle.
But you do need to have some sort of checking.
What is Cash App? I never even heard of that.
Oh, it's another one.
That must be an old-timey deal.
But look, if you have dirty dollar bills,
Yeah.
send them to me.
You'll clean them, take care of them?
I'll take care of them.
You're going to
Okay,
launder.
perfect.
Brent just
Whatever.
admitted to money laundering.
I'll even use
If you can find laundry detergent.
Downy. Downy dollars.
Heck, you know what? Yeah, listen,
you go.
Listen, I am a big fan of soft scrub. I'm sorry, I'm going to clean my cleaning habits. But that soft scrub with the bleach.
Oh, yeah?
Go ahead and try to find soft scrub anywhere in this world, planet.
Yeah. It's a bleach
I'm
shortage.
obviously not. I'm not the only closet freak that likes soft scrub. But nothing cleans a sink better or a countertop than that. I mean, that you should just brush with that stuff. It would take the, your teeth would be white.
Yeah.
Listen, I'm not telling anybody to brush with soft scrub because that's where that seems to go when you tell people stuff. But what I'm saying is that, gosh, try to find.
Well, they were putting it out in two versions, with
Not
or
soft
without
scrub.
bleach, and
Oh yeah,
now
no, yeah, right. These stuff without bleach.
they're going to put out several versions in 30, 40, and 50 grit.
Well, thanks to Rich, now they're going to have to put a new disclaimer. Please don't brush your teeth with it.
Yeah, don't try this at home.
I'm just saying the cleaning aisle is odd as far as what's in there. I did get
Which is not much.
I did get the Mr. Clean magic wipes or whatever the heck they are, but I'm like, where's my soft scrub? Very, very disappointing. So you're going to get this severance package. I just had this question the other day. Well, I shouldn't put money in my health savings account. I just want all the cash. I'm like, no. Right? We want to try to maximize your health savings account contribution. I know you're a big fan of these. Like I am of soft scrub. You are of HSAs.
Yeah, absolutely.
And why do you like them so much?
Well,
Dan?
the kicker here is that, one, this is the only account in the world that's going to give you that triple tax benefit of money goes in tax-free, you leave it and let it grow, it's going to grow tax-free, you take it out for medical expenses down the road, it's going to be there and come out tax-free. There's no account that'll give you that ability. So the problem, and we've been trained to kind of like an FSA, flexible spending account, you use it or lose it. And the HSA is a little bit different because it does allow you to roll the funds over year to year. The idea would be is if you can actually put these funds aside and not use them, pay for medical expenses annually out of your pocket, this is one of the best retirement savings accounts that you can have. Studies show, looking at different numbers, HealthView Services, Fidelity, Transamerica Retirement, many different studies show that you're going to spend $280,000 to $350,000 in retirement on healthcare alone. So it would be prudent to put these funds aside and let them grow in this manner. Now, you can't put a ton of money in there, Rich. It's $3,550 if you're,
Right.
a single. If you're married, you have a family, you can put $7,100. So you're not going to be able to break the bank. And yes, I understand it's a lot of money for a lot of people, maybe more than what you're putting into a 401k. But I would even go this far, Rich. If your employer is not matching, I'd max out that HSA first, then go back to the 401k. And start putting funds and contributing there. And even then, I'd probably go to the Roth versus the traditional pre-tax 401k.
So, but people are getting money in their severance. They're going to get, 6 weeks pay, whatever it is, 12 weeks, whatever. And they're like, well, I don't want to max out my HSA. Well, I'm like, we're going to do that. And then I must have really failed in my communication because the client I've been working with for so many years goes, oh, yeah, I've been using my HSA every year and I've been fine. I'm like, wait a minute.
No.
Whoa, no. That's a failure on my part. So make sure you do that as part of your severance. Don't, they'll fund it. Just make sure you do it. Also, the big question. Do I take my lump sum or a pension annuity? And the decision, I will tell you, is personal. Every broker is going to tell you to roll it over.
Yeah, we could spend a lot of time on this one.
We sure can. So many variables have to go into whether or not you take the pension or not, including the viability of that pension. And believe it or not, there are a lot of corporate pensions that are in very good shape, right? But you need to run the numbers. It's not as easy decision. Okay, it's again, I understand it. Again, one of my dear clients she's lost her job. She's gotten a severance. She's younger than 59 and a half. And I said, listen, and it was worth it for her to take the lump sum. We crunched the numbers. I said, well, you want to leave the money there because you're going to need to, I want you to withdraw from the IRA first to recreate your paycheck. And there you avoid your 10% withdrawal penalty. So there's going to be and I've run into this, I don't know how many times, Danny, you have, where right away someone goes to the broker and they roll it over and they go, well, now I need cash. I'm 56 years old. Well, I'm like, should have just left it in the 401k to avoid the penalty. Yeah, there are ways to take it out of your IRA and avoid the penalty, but it's a pain in the neck to do it.
Well, and they've done that right now because of the current environment that
you got to be tied to pandemic. It's got to be a pandemic type of expense. But I'm saying is sometimes leaving it in the 401k for a little bit because you need the money is not a bad idea.
And the other aspect of that too, Rich, before we go to the next segment, is that taking funds out of the 401k right now may be a better option than actually using cash that you have on hand you've already paid the taxes on.
Absolutely.
So take advantage of those opportunities right now, especially if you don't have the typical income that you'd have coming in. Maybe you're at lower tax brackets. And with these new tax policies that are likely going to come down the road, you want as much after-tax dollars as you can have.
That'd be good for you to expand on because it's very counterintuitive, Danny, when we come back. Here at the Real Investment Show on 700 KCV, the voice of Texas. Stay tuned for our next segment.
Had the guts, got the glory. With the distance, now I'm not gonna stop. Just a man and his will to survive.
Get daily investment news you can use, delivered at the speed of the internet. Sign up for the Real Investment Report now at realinvestmentadvice.com.
I wanna be the very best, like no one ever was. To catch them is my real test, to train them is my cause.
Welcome back to the Real Investment Show. I'm Danny Ratliff here with Richard Rosso. So talking about tips to consider if you're getting or about to get a severance package, some of the things that you should be doing. And Rich and I were just talking last segment a little bit about distribution strategies if you need to recreate paychecks. And, one of the things that, we mentioned is counterintuitive is that so often we think that we need to strictly spend money from after-tax accounts, meaning our checking, our savings. We deplete these funds before we go towards retirement funds. And you can make an argument for both depending on your situation. Now, if you had a large severance this year and you actually paid a lot of taxes, then that's probably going to be the right avenue to go. However, if maybe you got that severance last year and you're looking to say, you know what, I'm trying to bridge the gap to Social Security, or I'm trying to, recreate that paycheck the most tax efficient way. Many times we would actually rather you take these funds from a retirement account, pay the taxes versus depleting those emergency funds, the reserves, the funds that you have as after tax dollars, because you've already paid taxes on those funds. Now, there's many other things that need to be considered. We talk about a lot, Rich, those stealth taxes, Medicare surcharges if you're 65, or even if you're getting close to 65, because distributions 2 years prior can impact what you actually pay in Medicare premiums. Now, the other aspect, Social Security taxation, a number of other issues that you want to be considerate of. However, this is why we like to spend a lot of time on this to make sure that we get this right for clients. So you need to make sure that you're looking at all of the different avenues here. Now, most advisors, I think, Rich, are going to say what? Oh, yeah, just go ahead and spend that down. Let those tax-deferred funds grow.
That's the common misperception that's communicated. And that is not the right advice for many people to do.
No, it's not. And look at the new tax policies that are coming out, talking about the stimulus. You and I have been a big fan of looking at other avenues to protect assets from Uncle Sam. Mm-hmm. And now, we're starting to see there's a lot of policies out there that are not going to be beneficial to many Americans. Meaning that your paycheck's going to be a lot less moving forward at some point. And I would suspect, regardless of not getting into politics, we've always thought that it doesn't matter if you're a Democrat or Republican.
We've been talking about this for a while.
Yeah, taxes have to go higher.
Now we're just thoroughly convinced, and frankly, there are a lot of people that are coming to us that are now thoroughly convinced, even though we've been talking about it for a very long time. And even if they're not straightforward going higher, which is in the way through federal marginal tax rates, most likely they are through what I call the stealth or back pocket taxes of taxation on Social Security, right? Right now, 50 to 85 cents of every dollar, depending on how much your adjusted gross income is going to be taxed. I can see those numbers changing to where more and more individuals are getting taxed on Social Security. In addition to that, Medicare has base premium charges, like on Part B. And depending on what your income is, that includes your distributions from pre-tax accounts that you've sheltered most of your money away into, there are these IRMA charges or additional charges depending upon your income. I expect more and more people will be paying these additional charges on top of the base premium, making less income. So there are ways to tax you without you being realized you're getting taxed based on all that money in pre-tax accounts. So you want to start draining those down in a tax smart way. And to Danny's point, I just literally this week told the client, no, you're going to leave the cash from your severance, and we're going to, talk to your accountant, see where you are this year, and whatever room we have, we're going to not Roth convert it, but we're going to start draining this IRA. And she's 55 years old. She can get this IRA drained nicely before required minimum distributions at 72.
And, I had the same conversation yesterday with a client who was actually thought they were going to go back to work, lost their job last year, was drawing down those after-tax dollars like checking and savings. However, we've been checking in periodically, determining, okay, you know what? The job market looks pretty bleak right now. My chances of going back to work are probably fairly small is what he thought. So we said, okay, well, let's start looking at the strategy on how much you should take out. Let's replenish some of those funds, and then let's start taking these additional funds now for the remainder of the year. If you're going to say, you know what, maybe I am out of the job market, and now we have a much better understanding of what your taxes may look like for the year, and we can replenish those emergency funds, plus recreate that paycheck in a different way. So there are so many different avenues and things that you need to be considering at this very moment that typically is not what we're told. Most advisors probably say, don't do that. Go ahead and spend that cash. Pre-tax dollars, let them grow, let them grow. It's the best thing ever. And unfortunately, you may wake up and taxes may be much higher. You're in a much higher tax bracket, and this actually ends up hurting you. So
compounding snowball may not overwhelm the tax snowball.
That's right.
If we're correct here at RIA, and overall returns on the market are less than, and I'm being generous, 3% over the next 10 years or so, your taxes are going to way outweigh the benefits of that tax-deferred account. And I'm talking about even when you're in retirement. So your financial partner is going to have to stay abreast of not only changing trends because of COVID to spending and so forth, but also changes to unemployment, social net safety net programs, Social Security, Medicare, taxes that are going to affect you. And a lot of the old advice that's been given in the industry, financial industry, that is still followed, no matter what, it's always a bull market, are going to need to change. We've been looking to change them. I've been looking to change them for about 9-10 years, but they're going to change. Otherwise, you're going to get hurt. So we all have to stay abreast of what's going to, the other side of this is going to look like. And frankly, I don't know. And again, I am no medical expert, but it just feels to me like this COVID thing is not going away. It's not like it comes and then it goes. Like it's part of our lives, just like the flu is, right? I'm not saying it's like the flu. I'm saying that COVID's back. we can't continue to have these kinds of reactions to it.
Well, at some point you got to start living your life, and you have to take responsibility for you, your family, how you go about this.
You just have to follow these rules of hygiene, but you're going to have to open everything up, and you're going to have to sort of, like Danny said, you're going to have to try to live your lives. It almost makes it sound to me that if we close and we stay home for 6 months, this virus goes to zero.
It's not going to happen. I mean, we've seen that already.
No, absolutely. And then it was supposed to be heat was supposed to do it. Well, the heat here in Texas lately, because we're all like, we're done. We're falling off the bone here. My gosh, yesterday I was like, really? I just kept looking at the sky. Really? This woman passes me and goes, oh, he's got something. It's not COVID, but he's losing it. It's a part of our lives. So sooner or later, we're going to have to work with it, or we're never going to return to any type of economic prosperity. And that's the world. That's not just us.
Yep. No, absolutely.
It's the overall global economy that's going to have to do
well,
that.
And I think that's why it's so important to talk about, things you can do if you're about to get a severance package. So what would be the next tip, Rich? What would you recommend somebody look at? Obviously we talked about how to recreate a paycheck, maxing out a health savings account, 401k. Do you roll funds over? Do you take a pension?
Yeah.
What else would you consider?
Well, what about net unrealized appreciation, NUA? So if you have company stock in your company retirement plan, you might be able to complete this in-kind distribution of the shares into a non-retirement account. This can be very desirable, and I know, energy stocks have dropped off dramatically. However, there are people that have been in these industries for many, many years, and they still have significant gains. So I might be able to go ahead and move this money and have the original basis or the original value taxed as ordinary income. Then I can have the money grow, the stock grow after tax, and be taxed down the road as a capital gain, which, well, right now capital gain rates are lower.
Yeah, NUA may not be as beneficial.
But under, Mr. Biden, we might see that capital gain rates are not going to be favorable, and that is always a risk, especially with NUA.
Well, and so that may be a good argument to go ahead and do that this year.
Yes, absolutely.
In the event something like that were to happen.
You got to be real careful with it because you have to distribute the entire account. You just can't pull the stock. You have to talk to your HR department, talk to your financial and your tax advisors, and make sure you are doing this properly because it could be hurtful from a tax perspective if you're not. The other thing is healthcare coverage, right? Because your company's saying to you, well, you have COBRA and this is how COBRA works, but are you close to or at Medicare age, Danny? What kind of pitfall can we get into when, and again, had someone at 65 tell me that, damn it. Listen, you got to be real careful when you're taking your healthcare benefits at 65 from COBRA versus Medicare. You could be in for a world of trouble.
You could. You don't want those. You don't want those penalties if you take that incorrectly. So make sure you understand your healthcare benefits. Understand COBRA is not an extension of a qualified plan. There's so many things that you need to do. In fact, go to Real Investment Advice. Go to tips for, if you go in a search engine, tips to consider if you're at risk of getting a severance package. Type in severance package. This should come up. Mm-hmm. Go to realinvestmentadvice.com. Ask a question if you have any questions. Thanks for hanging out with us this Friday morning. We'll see you guys next week. Have a great weekend. You're listening to Real Investment Show. Chris Salcedo is up next.
Get daily investment news you can use, delivered at the speed of the internet. Sign up for the Real Investment Report now at realinvestmentadvice.com.